Today's session, we are going to discuss about the classification of taxes. As we already studied the meaning of tax, as we know that the tax is a compulsory payment made by a common man or citizen to the government. The aim of levying the taxes by the government is to conduct the welfare activities in a state or country. As we know that every government, whether it is a state government or central government, has to discharge its statutory, administrative, and social functions. In order to discharge these functions, the main source of income to the government is tax. Now, in this session, we are going to see the types of taxes or the classification of taxes. As we know, there are two types of taxes. One is direct tax and second one is indirect tax. So the direct tax is a income tax wherein the consumer pay directly to the government or citizen pay directly to the government. When it comes to the indirect tax, your citizen or consumer is paying to the mediator or to the intermediary. That intermediary is responsibility to pay to the government on behalf of the consumer or citizen. Right. This direct taxes in India is going to be governed by CBDT, Central Board of Direct Taxes, uh, which is governed by the Department of Revenue, is responsible for the administration of taxes. Similarly, as we have already seen the meaning of indirect taxes, the indirect taxes are going to be governed by the Central Board of Indirect Taxes and Customs. Now, looking at the in details of the types of direct taxes in India, a few examples that we are looking at: the income tax, STT, security transaction tax, capital gains tax, corporate tax, and the wealth tax. Now, let us see in detail about the types of direct taxes. So, income tax, as you know, it is a direct tax which is imposed on the individual who is earning income in a particular financial year, and based on his income, the tax will be charged applicable on the tax slab basis by the income tax department. Now, coming to the security transaction tax. The security transaction tax is collected directly on the person who have a demat account and who are in operation of purchase and selling of shares, mutual funds, securities, etc. Then coming to the third one, capital gains tax. As we know, capital gain, when any asset has been sold by holding more than 3 years, is called as a long-term capital gain. And if any asset has been sold within a year, is called as a short-term capital gain. And in on which, if you are earning any income on long-term asset or on short-term asset, you have to pay the tax directly by the assessee or individual who gained it to the government. That is called as the capital gains tax. Then coming to the corporate tax. Generally, this on every corporate who has been registered in India under Companies Act of 1956 or 2013 has to pay the tax on the profits which has been earned in our country. So these corporate tax also have like minimum alternate tax, fringe benefit tax, dividend distribution tax. These are the other taxes that will be levied by the on the corporates. Then we have another direct tax is called as wealth tax. Wealth tax will arise from the ownership of the properties and is paid every year based on the market value of the your property. So if you have any building, car, or gold on that, you have to pay the tax based on the market rate. Now coming to the types of indirect taxes. So the following are the indirect taxes. There is GST, customs duty, value added tax, excise duty, anti-dumping duty. These are the various few various types of indirect taxes. When it comes to the first one, GST, introduced in India, which subsumed nearly 17 indirect taxes and which has become a single comprehensive indirect tax imposed on all the goods and services as per the tax uh, slabs laid down by the GST Council. The one of the biggest benefit of the GST is to eliminate the cascading effect, that is tax on tax effect. Coming to the second one, custom duty is the indirect tax. Second one, this customs duty is imposed on the goods or any product which is entering into India through the ports uh, on which this tax is imposed are called as custom duty. Then indirect tax is value added tax. So generally, the VAT has been subsumed on all the products after introducing the GST, but it is retained on where few products, that is on alcohol and petrol products, which is coming under the subject to the state and central um, governments. Then we have excise duty. Excise duty, the fourth one, which you are taking as an indirect tax example, is when any goods that has been manufactured or produced within our country on which the tax is collected is called as excise duty. Then fifth one we have is anti-dumping duty. So this is levied upon the goods that are exported at a rate less than the standard rate fixed by a nation to some other nation, which is levied by the central government. For example, if the China is dumping the mobiles into our country for a lesser price than what are being producing in India by our domestic companies, in order to bring to certain equality, the government, Indian government may impose anti-dumping duty in order to increase the price or to become more or less range equal to our domestic companies, to help our domestic companies and to survive them in order to meet the competition. Now, these are the few differences between the direct tax and indirect tax. Generally, direct tax is imposed on income and profits, and indirect tax is on goods and services. Direct tax is going to be paid by individuals and businessmen, and indirect tax are going to be paid by any consumers. How much the tax are going to be paid by direct taxes depends on income and profit. Similarly, and indirect tax depends on the products what we purchase. And direct tax cannot be transferred. Tax can be transferred. Tax evasion on the direct tax is possible, but indirect tax not possible. So these are the certain differences between the direct tax and indirect taxes. I hope I'm clear uh, with this the differences between the direct tax and indirect taxes. Thank you.